So let's have a look at SPY S&P 500 SPX. So at the moment I'm looking at the spiders chart. Today we on the market we closed about 1.1%. S&P 500 gained 1.1%. Russell 2000 gained about 2%. Nasdaq was a bit shy of 0.8% move, and the Dow gained really good as well today. Let's take a look at DIA. So in this video I want to look at 2% for the Dow. In this video we're going to look at only SPY and SPX basically, and what do I think from here for the stock market, because if you look at the past 4 days or so, it's been extremely volatile. And a lot of people have been maybe talking about, oh, volatility is up, volatility is up. Well, volatility VIX index, a lot of people may not know, it moves off of people buying options to protect their position. So the ratio, put to call ratio, higher it goes, the higher VIX goes. So the more people, if you can see here, SBOE market volatility. So if more people rush to buy puts to protect their shares, because when market is sliding pretty much with the volatility like this, like you have seen like DocuSign like 40% down in a day. There are a lot of people who have millions, billions of shares, and it's hard for those big guys to sell their shares in a matter of seconds or minutes, because to liquidate that kind of a size, it takes days to sell those kind of sizes without moving the stock price. So what they do is they go into option market. Option market is third biggest market in the world. So it's I think 2020 data, $20 trillion market. And they go buy puts, and when they buy puts, VIX goes up. All right, so VIX just doesn't go up because stocks are falling. I mean, stocks can fall, but if nobody buys puts, VIX is gonna stay low. So it moves off of option activity, if you didn't know. And today, let's go back to SPY. So SPY, S&P 500. Basically, in the morning, we gapped, we opened green, but we tested the 50-day simple moving average and bounced off of that level. So what to watch from here now? So as a resistance to the upside on a spiders, I'm going to be watching this level right here, 463. If you are a believer that, hey, we might make new highs from here and market can take off and we can have that Christmas rally. So that's the scenario. If we get out of there, that level to the upside, I'll be watching overall market to the upside. To the downside, to bet against the market, I would need to see SPY to pretty much S&P 500 lose its 50-day moving average, slip below that 50-day SMA, and in that case, let me bring up the moving averages. It can come down to test its 200-day moving average. So also a lot of people watch 100-day moving average, which is right here, purple line, which is at the moment 448. That level could act as a support, maybe to trap some shorts, but even if that level doesn't hold, it can come down to these 200-day moving averages. So this is a downside possibility. And also, if you look at the MACD, well, momentum is still to the downside, but it's not like waterfall downside, right? We're chopping here at the moment. So this is a Christmas tree trading, basically, green, red, green. And also Jerome Powell next week, they have to announce the decision about the rates, whether they're gonna raise the rates or they're gonna keep everything unchanged. That will move the market as well. But another thing is that, look at it. So the volume is staying high. Today SPY traded with 100 million, which is almost twice more of its average volume, which is, I look at 60 million, and you can see for the past 7 trading sessions, we were pretty much trading with a big range. All right, and 1%, it wasn't moving above 1% or below 1% for so many consecutive days right here, I think, when it started moving, but now not anymore. Pretty volatile because people are rushing to buy puts, basically. Another way is if you don't have like, this is the put to call ratio for SPX. Anytime it's above 2, well, that means market is getting a bit bearish. And also, if you this is a futures, basically SPX put to call ratio, but you can look up SPY's put to call ratio directly during market hour on basically Thinkorswim. If you have a Thinkorswim, you can just come down to the option tab of the any ticker symbol you're looking for. So here today, well, I don't have the SPX data yet because futures are still trading, and they're going to have a break in about an hour, and then they'll release the data later. So today you can see, despite market being up 1.1%, calls, 2.1 million calls traded and more puts traded, 3.4 million puts traded. So almost twice as many puts were traded because, well, just like I said again, so big guys cannot liquidate their position, or they don't want their position, like they can't dump like billions or millions into a volatile market like that. Well, when volatility increases, it might increase the liquidity a little bit, but still it's not enough for everybody to get out who wants to get out. And in that instance, people go hedge with options. So also, one more thing I wanted to mention here is 5-day moving average. So we are above 5-day moving average, so that's good. It needs to stay above, build above for me personally to consider SPY to the upside. And also, I wouldn't anticipate Christmas rally yet until Jerome Powell announces rate decision on December 15th, because second half of the December would be more appropriate to have that sort of expectation. But you can look at individual stocks that are heavily beaten down and just pick one of those, and if those names like were in your watch list for quite some time, I mean, that those stocks, like if you individual stocks can do much better than pretty much relying on an index to go up like 5-10%. So, but probability of SPY from here going up 20 points or down 20 points is about 25% or so. So it can either go down to 200-day, or it can go take out its all-time highs. And maybe a lot of people think that Sp500 will reach 5,000 before any meaningful correction, but again, it's just speculation out there. So another thing you can keep an eye on, so this is the heat map of the market. So today's bounce was pretty much broad bounce, so it wasn't like a few stocks pushing the indices higher. So this is S&P 500 heat map, and then this is Russell 2000. So if you look at the Russell 2000, maybe healthcare was a bit mixed, but if you look at the NASDAQ, well, Tesla slightly negative, Nvidia was down 2%. I think Nvidia can come down a little bit more. AMD was down 3.4%, and Moderna just got pretty much hammered a lot, 13% down. But everything else was just doing fine except for these names, a few chip makers. And individually, like chip makers, like this sector as a whole has a pretty big weight in S&P 500. So you can use, I personally use SOX Semiconductor Index to see what's going on, and you can see here pretty much it's doing nothing, moving sideways. Momentum has slowed. So if semiconductors sell off more, we can definitely see a bigger downside move, because even though 5-6 days market was volatile, semiconductors didn't sell off as much. So they started rolling over. Biggest two stocks today, Nvidia, AMD, and others, but we'll see. Also, you can keep an eye on NY Fang. So basically Fang index. So this is for the large cap stock names. So on Friday and even today, it tried to bounce off of its 200-day moving average, because in the morning Amazon was negative, Google was negative, except for Apple. Fang names were pretty much negative all, and it started bouncing off of 200-day. So until it gets back above its 50-day simple moving average, which is at 7,500 right here, I'm not anticipating any big upside move or any like significant short squeeze. And same thing to the downside until it slips below the 7,050. This is 200-day moving average. I'm not anticipating big flush down to the downside or maybe bigger correction. So either side of this scenario has to confirm before I take any trade. So you can take advantage of this information just to I mean, it's not a financial advice, but to see like what you can do with your positions, whether you're gonna hedge them or you're gonna double down or you buy the dip, whatever you have to do. So what else we can take a look at here? So SPX put to call ratio, I mean, I don't have that data, but usually when puts, there are more puts being purchased, I come in and put on every single days above that candle, this blue candles, saying that, hey, look, just to have a visual representation, instead of looking at those put to call ratios individually for every day, I just put it over the chart to see where people were shorting. And usually for the most part, people, when they buy puts, they're like more right than wrong, because if they're right more than 50% of the time, well, that means they're correct. More often they're wrong. So look at how many days in a row they were buying puts right here, up here, and we had SPY drop, S&P 500 drop, and market drop. Same here, and right here as well. And then right here lately, once market pretty much started stalling and moving sideways more aggressively, people started buying puts, and market rolled over, and it's not a big drop, okay? It's 5%. So more of a decent correction. If you're waiting for a correction, let's say I want to buy a stock but I want decent discount, well, I would look for anywhere 10 to 15%. 20% maybe a bit extreme for this type of a market we're having, because we're still in a bull market. So 10%, yeah, I think that could be a really good one. And 10% would put us somewhere. Let's measure, where would it put us if market drops 10%. So 9% would bring the market down to 200-day moving average. So yeah, very, very likely. But again, I don't want to make this video too long. So that's the update for SPY, S&P 500 overall market. If you guys liked it, drop a like, subscribe to the channel. I will see you in the next one.